So a lot of people have asked me and reached out to me, Nelson, how do I qualify for a loan? Like, I have needs, I have expenses, but I don't know how to qualify for a loan. What are the things that I need? And I tell them, listen, this is very simple. In this video, I'll share with you 4 simple steps that you can use to potentially boost your chances of getting your loans approved by your lender. So let's dive in. As a former loan officer, I can tell you categorically that these things are not difficult, right? If you follow these 4 steps, your chances of getting that loan will increase dramatically. A loan underwriter typically checks for a few things before they make a decision on your application, and one of them would be the purpose of the loan. And believe it or not, because I've seen so many people like sending loan applications without actually stating a genuine purpose of the loan. Right, so you could say, I want a loan because I need to travel, and that's genuine, that's fact, right? You could say, I want a loan because I want to buy furniture, and that's genuine, that's true, right? You could say, I want a loan because I actually want to pay off existing debt that have high interest rates. That is genuine, and that's fact as well. But you have to state the purpose, because the underwriter or the loan officer wants to see that I am approving or making a decision on an application based on a genuine purpose of that loan. Do not come and say you want to gamble, for example, right? No one is going to lend you money because you want to gamble, because it's a very, very risky business and a very, very risky adventure that you're about to do. You have to need that loan. You have to show that you need that loan, and it's important for them to see that you actually need that loan. 2, your income. Obviously, if I want to give you a loan, I want you to pay me back, right? So if you have to pay me back, you have to show me that you have the income to pay back. Do not apply for a loan because you feel like you've had a relationship with a bank and the bank is just going to approve you without showing that you have sustainable income to pay that loan off. So you need to show that your income is there and it has the ability to service that debt. Then there's your employment, and a lot of people ask, why do they need to know my employment is 3, 6 months, 1 year, or 3 years, or 5 years? And I'll tell you, there are a lot of things happening in the Canadian economy right now, and if I have to give you loan or funds, I want to be sure that you can pay me back. And one of the ways is to show that you have a stable income, and one of the ways to show me that you have a stable income is to show me that you have a stable employment. So that's why you find most loan officers or lenders or credit underwriters say, I want to see that you've passed probation. Probation generally is between 3 months and 6 months. So if you bring an application and you're new on your job, you've just been on job for 1 month, I cannot trust that you're going to be in that job for the next month. Remember, probation tells the underwriter or the credit officer that your employer have actually certified that you can do this job and they are willing to keep you for the longer term. So that's why it's important that you show an employment that is past 6 months, which tells the underwriter that you're past probation. Otherwise, you find most underwriters or loan officers asking for a letter from your employer stating that this applicant have actually passed probation. One of the ways you have to also look at income is that the loan underwriters want to see that you have the ability to service the debt. So for what most banks do is that they want to ensure that your debt is not greater than 40% of your total gross income monthly. So I'm going to make it very simple. If you earn, say, $120,000, that would equate to $10,000 every month. Most loan officers wouldn't give you a loan if they find out that the debt you currently have plus the debt you are asking for, which is the loan you're asking for. So I'm talking about the monthly payment on each of the debt you currently have, plus the monthly payment on the potential loan if you get approved, would not exceed 40% of your gross income, of your monthly gross income. So with the example that I just gave you, if your monthly gross income is $10,000, they want to ensure that your debt, your existing debt plus your monthly potential debt would not exceed $4,000, which is 40% of $10,000. So when you see people say you do not qualify because your debt ratio is high, it simply means that the total debt you have monthly exceed more than 40% of your gross income. So you have to keep that in check, and if you can keep that in check, you stand a better chance of getting approved for your loan. And then there's your credit profile, your credit bureau, your credit report, your credit score. These things are very, very important regardless of what people say. I have multiple videos talking about credit scores, but generally what you need to know is that if your credit score exceeds 700, then you stand a better chance of getting your loan approved, because what that tells me as a former underwriter is that if you have a 700 credit score or a credit score higher than 700, then you are financially disciplined. It means that you have existing debt that you've paid on time, so your repayment history is good, your utilization is good, and you're not a credit seeker. What that means simply is that you do not just want credit for the sake of credit. You want credit because you actually need it, and when you get it, you use it properly and you pay on time. These things have a way of beefing up your credit score, because your credit score is based on an algorithm that talks about your repayment, your utilization, and the inquiries on your account. All these things, including the age and the time you've been on a credit bureau, gives you a credit score. And any credit score over 700 is a good credit score. It gets better when your credit score is even over 800. That becomes a great credit score. So please ensure your credit score is high enough. Ensure that your debt is within 40% or lower than 40%. Ensure you have a good employment, and ensure you have a good purpose of loan. These things combined together give the underwriter faith and honesty and trust in lending and approving your loan application. And I'm going to throw in a bonus there. Liquidity. Sometimes you want a loan and you want $10,000 or you want $20,000, but you have $0 in your account. Most underwriters can be very, very skeptical when it comes to this, because if you've been working for 2 years or 3 years or 4 years, they expect that you have some sort of savings. Liquidity simply means what's the asset that you have in your account. So if I'm trying to look at an application, for example, and I see someone that has $10,000 or $5,000 in their account, but they're asking for $20,000, I tend to give them more trust, because I know that you've worked so hard to save this money. You probably have an expense that exceeds what you have in your account, and you want extra money to foot that bill. And that's why sometimes it's good to have some sort of savings or liquidity, so that the underwriter or the credit officer can go back, look at it and say, yes, I'm going to approve this loan because this person have a good credit score, they have good debt ratios, they have a good employment, they have a good purpose of loan, and finally, they actually do have some assets saved that they can use to pay back this loan in case something goes wrong. Those are the few things you need to understand that the underwriters look at before making a decision on your application. Get this right and stand a better chance of getting your loan approved. These are my experiences and these are my advice. It's worked for me. It's something I've done practically before, and I know that if you actually employ some of these steps that I've said and taken, you would stand a better chance of getting your loan approved. All right, my name is Nelson. I talk about personal finance, financial literacy, investment, budgeting, and saving. And if you like this, please subscribe, follow, share, and like this video.